Thanks for checking out this week's FinPrep Trading and Investing video newsletter. All right, so last week we were talking about looking for a breakout or breakdown out of this very narrow trading range at 215.50 to 217.50. So what we did end up getting, rather than the price zone we were looking for into the rising 50 DMA, as well as this trend line connecting prior tops extending back to the all-time high in 2015 and through this April 2016 top and some of this zone here, which would have landed us around the 210 area. What we did instead get is the trend line displayed on last week's video, which is part of the value within the FinPrep product line here of connecting the April 2016 high with a June 2016 high. You could then see had a bit of resistance on a one-day basis, breaking out to essentially all-time highs back in July. So though we didn't meet the 210 zone, what did end up happening, interestingly, within 30 cents on Thursday was price finally, the range broke out and came right into that trend line as support. So again, another two quick concepts in technical analysis is these lines which essentially acted as resistance, right? So price ceased to go up here, price ceased to go up here, price struggled here and then broke out here, and then when it comes back and tests it from the other direction, it then could become support, propelling a move higher. So that actually ended up being the case. So we will certainly keep this trend line on the chart for future reference. That's not to say it's set in stone and it can't be violated. In other words, price moving through it, but of course it is something that we will look at. So the key question looking forward for next week is basically, is this simply an expansion of the previously existing tight trading range, or is this truly a breakout to sustain new all-time highs? So even at 218.18, looking back against the prior all-time highs, flipping to the weekly chart here in that's May 2015, it's really still only slightly more than 2% above the prior all-time highs, so it's still a bit premature to necessarily think of it as a legitimate full-blown breakout, and then by implication resumption of the bull market. One definition could be it should exceed 3% above prior all-time highs. To be extremely conservative, you can use a 5% away rule. So just keeping in mind that when we were looking at the monthly chart, things were very overbought on the oscillators, as well as the weekly chart, extremely overbought. So this range only goes from 100 to 0. So the oscillator being up at 98 on both the ultra fast and the fast it tells you that how overbought it is, which then makes it vulnerable to pullbacks. So again, remains to be seen. Can't call off the bull market, but would like to re-examine long positions at a lower basis rather than reacting emotionally. So that's on that. The corroborating asset class that we're looking at is junk bonds. Just a very quick recap on junk bonds. It basically peaked out in June of 2014 and entered a bear market very briefly. I think it was approximately 24% from peak to trough. And the trough, coincidentally, are really in terms of coinciding in terms of time. For the week of February 12th, basically was the same week that we saw the low in the SPY and the S&P 500 this year. So that is why we examine both asset classes, junk bonds, which are risky bonds, as the name somewhat implies, right? Junk, with stocks, because we want to see them moving in the same general direction rather than against each other. So with the week that just concluded, you'll see that basically junk bonds pulled right into that teal line, which is the 50-day moving average, sort of a medium-term moving average, which is rising. So that's positive that price found support there and then moved off. Failed to close above the 20 DMA, just to be a little bit nitpicky. So not sure if there's going to be a little bit more filling in this mid-range of this upward price channel that has been now established in 2016, but that is something to keep in mind. But again, the good news is that generally it's corroborating the move. This bounce off the prior trend line we had here matches fairly well with that bounce off the 50 DMA in a rising price channel for junk bonds. So that's giving us a fairly healthy signal. Okay, guys, so again, just to recap, basically question of the week moving forward is this simply an expansion of the trading range? And this all-time highs, let's keep in mind that it is still only 2% away from prior all-time highs, so and extremely overbought, which would signal, perhaps a need to be cautious rather than exuberant here, right? So, with that, let's look forward to seeing what the market gives us or takes from us next week, and we can review accordingly. So, thanks for checking out the video, guys. All right, take care.